Good morning. Good morning. We are just going to give it a minute, just as folks are registering and coming in from the waiting room and joining the call. But we will be getting going very soon on today's episode of ForeCASt. So grab yourself a coffee or a cuppa and relax as you join us for the next hour. Brilliant. We're going to make a start this morning. Thank you so much for choosing to be with us this Wednesday morning for our next episode of ForeCASt. My name's Emma Jackson. I'm Head of Social Justice at Citizens Advice Scotland, and I'm really delighted to be your host this morning to take us through the next hour. Just very briefly to go through some housekeeping, you'll notice that your cameras are off and your microphones are off. Chat is disabled, but our question and answer function is very much working today, and we'd love to hear from you as we move through our speakers this morning. There's going to be lots of time for a question and answer section, so we need to get your questions in. Don't hold back, put them in at any point, and we'll take it from there. We've got a packed session as usual this morning. We have with us David Hilferty, who will give us an overview of what's coming through the network and some key stats and insights. We're delighted to be joined by Sarah-Jayne from our financial health team as we take a deep dive into all things money and financial well-being. And then we're delighted to have with us this morning Maria Booker from Fair by Design and Moya Loughery, who is the cab manager in Borders Central Cab. But more about our speakers as we move on. Today, we're here to look at the poverty premium. Why does it cost more when when you have less? We know that for tens, if not hundreds of thousands of households all across Scotland and indeed the UK, life on a low income is incredibly challenging, and there are some structural barriers and inequalities that make that more difficult for folks. So without further ado, I'm going to hand over to David, our Head of Impact, as he takes us through what the cab network has been seeing recently and over the last 12 months.
Thanks so much, Emma. And one of the key points I'll hammer home right from the get-go is that while discussion around data can often feel quite theoretical, quite academic, a wee bit distant and detached, what you're here today couldn't be further away from that. And the difference with our insight lies in its authenticity. It's entrenched in the experiences of real people, and it only exists because of the essential advice and support provided by the network. One cannot exist without the other. Let's take a look at overall numbers across the last quarter. If we can move on to the next slide. So during quarter four, and the next slide, Bureau supported almost 58,000 people with over 310,000 pieces of advice. And this morning, what I want to do across the next 10 minutes or so is start with that big picture and then progressively distill down layer by layer and wrap up by sharing just one person's experience. And in doing so, bring to life the complex experience of the communities that we serve and the unparalleled insight this presents us. Now, even glancing at these high-level demographics across the last quarter, I hope that you see, and I hope it begins to underline why we landed on the topic for today's forecast. Now, Sarah-Jayne and Maria and Moya will in turn go on to share their own expertise, their own experience in a few moments around the poverty premium, around how it costs more when you have less. But for me, it comes down to this. It's the toleration of harm. A lot of what I shared today may be unsurprising, but in many ways that makes it worse. You know, I've spoken about how that we know this, but that it's tolerated. And I've spoken before around how our insight is unique and highlighting what the harm is, because typically, somewhat naturally, people present for advice when something's gone wrong. We see people who are experiencing most harm and where intervention and other forms of support are most needed. The next visual is a useful exemplification of this. Move on to the next slide, please. Some of this may be unsurprising, but again, it bears repeating. Now, first of all, it's immediately apparent that advice demand, just overall, is most pronounced among people in the lowest incomes. That's what SIMD1 refers to, the bottom quintile in the Scottish Index for Multiple Deprivation, which shows concentrations of deprivation in communities across Scotland. Again, our advice and information is for everyone, but demand for it is greatest where need is most acute. Like no one else, the Citizen Advice Network supports people experiencing most harm. Almost a third of people supported by CAB live in the most deprived areas. And so people are presenting ever more challenging circumstances, usually at a point of crisis, usually when they've got nowhere else left to turn. And we're so very often the last door open for people who are out of options and facing unimaginable difficulty. The network's frequently acting as a backstop for failure everywhere else, from social security to social care to energy markets. Let's look at where advice demand is at top level for people in that most deprived quintile. Focus here on the blue and green bars here. People in the very lowest incomes make up 32% of all advice, but what people need advice on is not neatly and equally balanced and spread out. So it's disproportionately higher for energy at 41%, that's your blue bar. It's disproportionately higher for charitable support, that's your green bar at 37%. Now, you don't seek out this type of information or help just because you're feeling a wee bit curious. Rather, it's fundamental, it's essential. And what our data tells us, and tells us consistently, is that if you're on the lowest incomes, if you're living in poverty, you're experiencing more issues, you're experiencing more difficulty in accessing essential services. If we flick on to the next slide, we talk a lot about the depth of our advice and our insight because just as it's immense in scale, it's equally so in terms of its depth. Our approach to advice is wraparound, it's all inclusive. We look at a person's whole set of circumstances because few problems, few issues, as I'm sure we can all attest from our own lives, exist in sort of neat isolation. So we see that full picture. We see where issues and problems overlap and interconnect. So let's go deeper into that big picture. Again, as I said at the outset, we're starting with that big picture and we're breaking down level by level. And look at the imbalance here once again. 32% of all advice, but 46% of advice, of all advice in crisis grants, 44% of all advice on food insecurity. And again, this might be unsurprising, but again, it bears repeating. And if it is unsurprising, it should also be quite damning. And again, it's a toleration of harm. The next slide, I want to take a look at energy, particularly. We know energy is such a big part of the poverty premium. Two things happened on this last week that are notable. Energy price cap announcement, bills going down a wee bit. We also had the hint of a winter fuel payment partial U-turn, of course. Today, of course, we saw compensation coming for people who were forced onto prepayment meters. We get caught up in these moments, don't we? But to demonstrate that these aren't quarter-to-quarter problems and how the mitigations often mooted are inadequate, take a look at the long view and what's happening in energy. Because what's clear across the years here is it's causing more harm than ever before. More people are presenting in more traumatic, more difficult circumstances. We get caught up in these moments, as I say, and then we move on to next month. Remember last month, we were all talking about April Cruel Day. We were all talking about Awful April. Just some of these names given to the 1st of April when your rent hiked, your council tax hiked, your energy hiked, broadband bills went up, phone bills went up, all on the same day. And there was a sort of devastating relentlessness of that increase after increase where essentials become so out of reach for so many people. Now, like many charity folks, I was invited to comment on the impact on people across Scotland. And a few minutes into one radio interview, we get to that inevitable question, well, what can people do? And the person that I was on the interview platform with started talking about, well, you know, you can shop around, you can maybe cancel Netflix, you can maybe cancel your Disney Plus. Now, for me, that's the new avocado toast chat. Do you remember that one where the reason why young people couldn't get on the property ladder wasn't soaring wealth inequality, but it's because they were spending all the money on avocado toast and macchiatos? Well, we're really scraping the barrel now, aren't we? When we're down to this. When we're down to Netflix and Disney Plus. And it's insulting as it is absurd. Netflix and Disney Plus aren't driving increases in our advice numbers. Poverty is though. Because the choices that people are presented with are increasingly impossible. And you don't make good choices, you have good choices. Except what we are seeing increasingly is many people don't. And again, what I hope our evidence and insight does is hold people to reality, because let's be clear what we're talking about here. Now, one of the most damaging elements about the poverty premium is the cumulative, the compounding nature of it. And the strength of our advice is that it addresses that full picture. It addresses these compounding, these cumulative factors. Now, to illustrate that, a colleague was recently telling me about a guy called Peter, someone who's got a lot of support from his CAB, and he lives himself in the west of Scotland. And important to today, he's in that SIMD1 quintile. People in lowest incomes typically where deprivation and poverty is most pronounced and concentrated. Now, again, to underline the complexity of what the network does, Peter's been supported by his CAB since at least 2018, with the most recent contact being just last month. Now, during this time, his local CAB has supported him in so many different ways. An 8-month application process for PIP worth £5,000 a year to him. A 3-month application for housing benefit, £4,000 each year. Other things like a parking ticket, just under £300. Save money as mobile phone charges, £500. Half of that again on broadband and internet charges. 11 food bank referrals. You got assistance with energy costs on 20 separate occasions. An income tax rebate of over £1,000. And when I said their advice was wraparound and all-inclusive, I wasn't kidding, but it shouldn't have to be this hard, should it? And in Peter's example, again, we talk about the choices that people can make. In Peter's example, this is less about the choices he can make and more around how the systems, the structures, the essential services he must engage with, he must interact with, have completely let him down and completely failed him. Because framing the poverty premium, framing the cost of living crisis, framing the energy crisis in terms of the individual choices before people is entirely to miss the point, but we still see it. Just think of that. Just cancel your Netflix. And it risks perpetuating blame on the choices that individuals or households can make when these choices are increasingly impossible. Again, you don't make good choices, you have good choices. And what we see increasingly is many people don't have any good choices. When people have made every cutback and explored every option, and they're still in a position where they can't afford the essentials. And the crux of this often comes back to this for me. We're dealing with problems of such scale that solutions that will really make a difference lie in the decisions and choices of governments and regulators and markets rather than the choice of people. And a challenge we hold ourselves to is to highlight problems. Yeah, we've done that already today, haven't we? But to be really clear on solutions as well. And 2 solutions immediately come to mind for me. Just last month, we learned of planned cuts to disability benefits, and you've saw in the opening slides just how much of the demographic that we serve is reflected in that. Now, this week and last, we've had workshops packed full of advisors who are fired up on this, who are angry about this, who are worried about this, because they know that people are scared and uncertain about what this might mean. And our advisors are bracing for the impact of yet another wave of welfare reform. As one CAB colleague related to me in the aftermath of the last spring statement there, I just don't know if I can do this again. And for us, the proposed changes are incomprehensible. That's a choice. That's a choice that must be reversed. On energy again, we see real harm. Average energy debt for people presenting across the CAB network is over £2,500, roughly, or getting close to 2 years, or just under 2 years worth of bills if you look at the last price cap. And let's be clear, we're talking about debt that's been accumulated just to live, just to heat your home, just to keep the lights on. So we want to see a debt write-off scheme, one that's accessible, one that's extensive, one that's swift, one that's not bound up in layers of administration and bureaucracy, because when debt's unavoidable, as it has been for so many people, it's a sure sign that problems are rooted within markets rather than people. That too is a choice. That too needs to change. That too is a toleration of harm. Now, all of this isn't to strike a note of hopelessness. Last year, the Citizens Advice Network in Scotland put around £160 million back into communities. That's advice that changes lives. So even in this desperately difficult context, the network continues to deliver these life-changing outcomes. But should it have to be this hard? If that's part of the difference we make, on the other hand, the poverty premium, other external factors, has the reverse effect, doesn't it? So we need real change. These are problems entrenched in the social security system, and energy markets are failing to function in a way that works for people. So when we talk about the poverty premium, be it today, be it beyond today, let's not talk just about people, and the choices they make, because there's no getting away from the fact that we urgently need government, regulators, markets to take bolder action, to take swifter actions, and to ask themselves what better choices do we have.
Thanks very much, David, for that really excellent overview. I'm sure everyone was just as struck as I was by listening to Peter's experiences, really bringing to life, like he described to us, the compounding issues that people face. I'm delighted to hand over now to my colleague, Sarah-Jayne, who's going to help us to just dig into some key aspects of what the poverty premium means for folks accessing the Citizens Advice Network.
Thanks, Emma, and thank you, David. I think as a former money advisor, and like so many of our cabs, we know the poverty premium covers so many aspects. So what I want to do today is just add some context of how it actually breaks down, and when it comes to financial exclusion, what the poverty premium and how it plays a significant role. For example, access to banking. So this is becoming a growing concern across our network as we see more and more bank branches close, according to which, since 2015, there have been over 6,300 bank and building sites closures. That's at a rate of approximately 50 per month across the whole of the UK. And Scotland was one of the first parts of the UK to lose over half of our banks. And with further closures planned for 2025 and more already scheduled for 2026, this is becoming an extremely worrying picture. And that is because in our network, we know that bank branch closures disproportionately affect low-income communities and exacerbate the poverty premium. And the consequences for not having such access to banking includes those who are digitally excluded, who may lack the technology or the skills, unable to use online alternatives to banking or to other services. And that means increased costs. So being forced to use alternative services which incur higher fees, such as charging ATMs, postal orders, or even just the travel costs to get to that branch. And those increased travel distances don't just come with a financial cost. There's also a cost in terms of energy and the time it takes to travel. And for people who need or rely on physical branches, any closure means a longer commute. And that's people usually with disabilities or poor health, and they can often find it difficult to travel to that last remaining bank, or again, unable to use online facilities. And this loss of bank local branches affects the social fabric of a community. A bank can sometimes be the only place that someone can seek help, and speaking to branch staff may be that only interaction that someone has that week. So losing that connection reduces opportunities for social interaction and support. And it's not just individuals. Small businesses rely on physical branches for cash deposits and other banking needs. We go on to our next slide. So this is more than just about accessing banking facilities. It's about being able to bank in a way which suits you. And it means even getting a bank account can be a challenge, never mind trying to get to a branch. The FCA estimated that there are 900,000 individuals across the UK who do not have a bank account. In Scotland, it's approximately 165,000. This is the ultimate form of financial exclusion. And we found in our research that out of the 12 banking institutions who offer basic bank accounts, only 2 are easily accessible by allowing people to apply directly for an account, either online, over the phone, or in branch. All others expect applicants to jump through various hoops and are unable to apply directly for a basic bank account, taking away that right of choice. And we know by speaking to our network that several of our clients have tried time and time again to open basic bank accounts, but are only met with refusal and rejection, further exacerbating their already financially vulnerable and precarious situations. This can have a serious impact on people's incomes, employability, and mental well-being. We know that such financial exclusion can make everyday essentials such as insurance and energy bills cost more, but these additional charges and costs swallow up such a significant proportion of household incomes and cause further strain on already tight budgets. Without a bank account, people can find it difficult to receive income, especially if employers refuse to pay through alternative means. Even claiming benefits requires a bank account, and gone are the days of a post office account that could be used as an alternative. But there's also a level of financial disempowerment that comes from being unable to open a bank account. You have to rely on friends and family members to deposit money into their accounts. That reduces financial independence and can have a severe impact and implication, as well as high risk of misuse and financial abuse. People may struggle to keep track of their finances or separate what money is theirs, what belongs to their friend or relative, and that can cause a significant strain on important relationships. We go on to our next slide. With Scotland, there's a high reliance on usage of cash, and we know that those who lack access to banking and access to basic bank accounts tend to have a higher reliance on cash. So what we need is to ensure that the cash infrastructure is at a level where people who choose to access cash can do so without incurring that extra charge for that choice. Yet since 2016, Scotland has seen a significant fall in free ATMs, with the largest decline happening in the most deprived areas. Some areas seen over a 20% decrease since 2018, and the most deprived areas have a lower percentage of free ATMs compared to the least deprived. And that rise of free charging ATMs has also been concerning, especially in areas with perceived low footfall, which tend to be in the most deprived communities. But that could almost be a self-fulfilling prophecy. If you're charging to use an ATM and you put it in a place where the vast majority in that community are on low incomes, paying £2 a pop just to access your own money means that you then use that ATM less. That in turn makes it look like it's a less viable option for banks to put in a fee to use ATM. And people aren't ready to become cashless, as many may believe. A recent survey by NerdWallet found that just 4% of adults would rule out cash entirely. 11% of us rely heavily on cash. And it's not just older people. In fact, the same survey found that 18 to 24-year-olds were the most cash-reliant age group. And according to the FCA and their Financial Life Survey, we know that these groups who are more likely to be heavy users of cash, such as those with vulnerabilities, living with disabilities, or on low income. And that is because cash is vital. It's more than just a physical currency. It's a means in which they can manage their lives effectively. Go on to the next slide. Finally, when it comes to the poverty premium, we know that people on the lowest incomes pay more for borrowing, and that is because access to affordable credit can be extremely limiting for people with low financial resilience. That's often linked to poor or thin credit files, which means lenders charge more in terms of interest or offer very limiting loans. So research have found that almost 320,000 people in the UK are classed as having a thin file with limited data footprint. 1.7 million people have no credit reference agency data for the last 24 months. So what that means is lenders then view these individuals as higher risk. That leads to higher interest rates and fees. And for many low-income individuals, they don't even qualify for traditional credit products like credit cards and loans. So they have no other choice but to use high-cost credit or other options which are unregulated, such as buy now, pay later. And buy now, pay later directly contributes to the poverty premium. Providers may charge late fees, interest, and other hidden costs, adding to that overall expense for low-income households. And the instalment-based system of buy now, pay later can trap people in debt, especially if people have limited budgets, miss a payment, or struggling to manage. And there's the grey and black lending economy, such as borrowing from friends and family, which may not come with additional financial costs, but having that impact in relationship, what then comes with an emotional cost, as well as illegal money lending. So the latest figures in Scotland from the Illegal Money Lending Unit estimates that over 300,000 people in Scotland could be using a loan shark, and that's almost considerably doubled in the last decade. And the profile of the loan shark has changed. It's not some nefarious character in the shadows, but rather the fellow mum at the school gates pretending to be a friend, which is far from the truth. And this reality is true for so many of our clients. Take Sandra, for example. She came to one of our East of Scotland clubs recently after falling into rent arrears, and that is because, along with her earnings investment for council tax, her universal credit was being deducted for rent arrears. So with her income dramatically reduced, Sandra had no other option but to resort to credit. But because she had been made bankrupt over 5 years ago, she had to use high-cost credit, including getting a loan from her credit union, which used her child benefit as a payment. Sandra was trapped in that financial situation. She was having to use credit to stay afloat, and now her housing association was seeking eviction. And these struggles plagued Sandra and exacerbated her anxiety and depression. She couldn't see a way out, and the poverty premium was holding her down. With CAB support, a benefit check complete, Sandra was able to claim discretionary housing payment to cover her extra bedroom, as well as single person discount for council tax, and a claim for disability benefits due to housing issues. But as David talks about, this CAB support doesn't end there. Sandra was also advised on the benefit of having contents insurance, something she was able to consider now that she was in a better financial position. She was also advised the TV Licence Simple plan, which allows payments over 1 year instead of 6 months. Sandra was able to get support to apply for a social tariff for her internet and referred to Cosy Kingdom for energy support. And to ensure that she was able to get that fresh start and stop the eviction, she applied for bankruptcy. But because she had a basic bank account with Barclays, she was assured that a bank account would remain open. Moreover, due to the financial situation and the fee waiver now in place, she didn't have to pay anything for her bankruptcy. So Sandra is now back on a firmer ground and able to see a way out of the constraints of poverty premium. But whilst CAB are able to help the Sandras, more needs to be done. And that's because as a former money advisor, I know that Sandra's case is only too common. And as David said, why should this be so hard? And what better choices do we have? So some of the solutions that I think could help: alternative banking options. So this is where banks provide adequate alternative sources across a multi-channel approach, such as banking hubs, but designed for communities, with communities, so it accounts for their local needs. We need a universal service obligation for basic bank accounts. We may have the payment account regulations ensuring designated banking institutions offer basic bank accounts, but they have restrictions which impact on the uptake, meaning that people cannot apply directly for a basic bank account, but rather they have to apply for a standard account, get rejected, and hope to be offered a basic bank account. A universal service obligation would cut through all of that and ensure that no caveats or conditions, so that people can apply directly for a basic bank account and not have to jump through hoops just to get one. Improving and redesigning the cash access infrastructure so it's reflective of our modern society and doesn't push costs onto the poorest. Innovative and alternative credit solutions. Firms should explore other ways to assess credit risk, such as the use payment of private rent, open banking data to assess creditworthiness, or exploring and promoting alternative payment methods that offer greater flexibility and affordability for low-income households, such as that's the TV licence simple plan. Social tariffs for all sectors. As I said, many people are reducing or removing insurance due to costs, but when something goes wrong, they don't have the money then to pay for the repair or replacement. So we need social tariffs, not just for broadband and telecoms, but in all sectors where insurance is vital, such as car, home and contents insurance, so that even those on the lowest of incomes are protected. And inclusive design, getting it right from the start, designing products for the most vulnerable and ensuring inclusivity from the beginning of that product cycle. I won't go into too much detail on this because Maria from Fair by Design's on and they are the expert in inclusive design. But I will say this, CAST fully supports the calls on inclusive design, simply because we know when you design for the most vulnerable, that product actually becomes viable and usable for all. It becomes inclusive by default. Thank you.
Thanks so much, Sarah-Jayne. Just so much packed in to that short section from you. I think, again, just listening to Sandra's experience, highlighting new things that maybe we're not thinking about, the challenges that she had around TV licensing, around insurance, the sort of things that we all need as part of our day-to-day lives, and great to help us think about those things. Just want to encourage folks to start asking questions. Anything that you've maybe heard about this morning that you want to know more about, how does it resonate with your work? Please don't hold back. The question function should be at the bottom of the screen, so please do start to get your questions in. I'm absolutely delighted now to hand over to Moya Loughery. Moya is Head of Policy at Fair by Design, and Fair by Design are an organisation who exists to help reshape essential services so that things don't cost you more when you're living on a low income. Moya, we're delighted to have you here with us this morning, and love to hand over to you now just to hear some reflections from yourself.
Thank you very much, Emma, and thank you very much to David and Sarah-Jayne, who've done such a good job of setting up some of the issues and some of the solutions too, which I completely agree with all of what's been said so far. So as Emma said, Fair by Design is a campaign that aims to eliminate the poverty premium. We've been going since 2018. And we take the view that there's two ways that you can tackle poverty. You can increase people's income, which is really important and, you know, a really fundamental way of lifting people out of poverty. But on the other hand, you can also reduce their costs, and that's often the bit that is looked at less. And so that's where we tend to focus. And we've already heard some examples of the poverty premium this morning. So Sarah-Jayne's talked about getting charged for getting your own cash out of a cash machine. And the travel costs of having to travel to an ATM as well. The extra costs of getting hold of credit if you can't get it from a sort of high street or mainstream provider. I just wanted to give you some other examples. So, for example, you still pay more for your energy if you pay on receipt of your bill. I'll talk a bit more about that in a minute. In car insurance, you pay more if you pay monthly rather than paying all in one go for the year. So you pay about 11% more. And obviously, most people can't afford to pay all in one go, but particularly people on a low income, that's a significant extra cost. And you'll also pay more for your insurance depending on what area you live in. So if you live in a more deprived area, you're also going to pay more for your car insurance or your house insurance. You also incur a premium if you don't live near a big supermarket and you have to shop in smaller shops where the prices are more expensive. Or alternatively, you might have to get a bus to the nearest large supermarket, so you can't buy things in bulk, or because you have to carry them back, or you simply can't afford to pay out that increased cost to pay in bulk in the first place, even though it would save you money in the longer run. And another example of the poverty premium is where you can't afford to buy a good quality product. So maybe you have to get the cheapest washing machine or cheapest appliance, which has higher running costs and is going to wear out quicker because you can't afford to go for a better quality model in the first place. So lots of ways in which the poverty premium impacts people's lives. And we think that the poverty premium is costing £444 a year for each household in poverty. So that adds up to 2.8 billion a year. So it's quite a big issue, and nearly all low-income households will be affected by at least one poverty premium. So I just want to tell you a little bit about what we do at Fair by Design. So there's so many poverty premiums out there, but our focus is really on the essentials, because that's where people have to spend their money, but also particularly in energy, insurance and credit is where the research has showed the biggest poverty premiums lie. So David talked a lot about energy. It's where we spent a lot of our time as well, given the impact it's having on people at the moment. So as I said, at the moment, you still pay I should say there was some good news a couple of years ago, in that the government did get rid of the premium that you used to pay when you paid by prepayment meter. So the good news is that that's been eliminated, and actually if you're on a prepayment meter, you now pay the cheapest rates under the price cap for energy, which is good news and something we campaigned on for a long time alongside a number of other organisations. But you still pay quite a lot more per year if you pay when you get your bill. And we just did some polling over the last couple of weeks, because the interesting thing about that premium is that most people don't know it exists. So our polling showed that 57% of people who pay by standard credit, as it's known, don't know that they are paying a premium. And if they do think they're paying a premium, they think it's much smaller than it is. So 94% of people thought the premium was lower than it is at the moment, which is quite a staggering statistic. And 4 out of 5 people think it's unfair to pay any premium at all. So the standard credit premium actually went up in the price cap announced on Friday, unlike the general trend of bills going down, but it went up from £120 to £135 a year extra for paying that way. So that's something that we work on. Alongside Citizens Advice Scotland and many other organisations, we also call for a social tariff in energy. We think that's one of the key solutions. When Fair by Design was set up as a campaign, the biggest element of the poverty premium was people not switching energy supplier. So we've actually been campaigning on a social tariff for some time, even before the energy crisis, to tackle that issue, that there's this assumption that people want to shop around and they're going to find the best deal. But lots of people, including a lot of people on low incomes, just don't have the sort of bandwidth to do that. It's not the priority in their life. And we want to ensure that they are automatically put on a cheaper tariff when that's what they need. We're also keen to avoid future poverty premiums in energy. There's a lot of change coming down the track, and sort of quite high risk, I think, that there could be more poverty premiums in that area. So another key area we work on in insurance, and our main concerns there, as I mentioned, was the fact that you pay extra when you pay monthly, and that you pay extra depending on what area that you live in. So again, we're looking at a discounted tariff for car insurance, which is a compulsory requirement, and also looking at the different risk factors that lead to different risk premiums in deprived areas. When there's more transparency, we can tackle those extra risks proactively. Final main area we work on is credit, and Sarah-Jayne's already referred to many of the issues in credit. So what we really need to see is more affordable credit options. And we've just done a project with a group of people who've had experience of not having access to credit, and created this photo stories exhibition. It's online, I can post the link in the chat, but it's also been shown at Holyrood and Westminster. And the aim is to raise awareness of what it's like not to have access to credit and what it means to you personally. Because I think in policy circles, that can sometimes be a bit of a hard message to get across, that, that people who are struggling financially should be given access to affordable credit. But we all experience these bumps in the road, these ups and downs where our income falls unexpectedly or is variable, or suddenly we get an unexpected cost. And people who haven't got much of a buffer need access to affordable credit more than anybody. So we work we're part of a pilot of a no interest loan scheme across the country that's being evaluated next year. We've worked with Toynbee Hall and Fair for All as part of that pilot. And we're also part of the coalition to campaign for a fairer banking act, which would require banks and mainstream providers to contribute to either lending to people on low incomes and all segments of the community, or contributing to other providers who are prepared to serve those segments. So there's a lot more I can say, but I will answer more in the questions. But thank you very much for inviting me today.
Thanks so much, Moya. So much richness again in things that you're bringing. And I think one of the things drawn out is that you've shown that change is possible by highlighting one of the solutions that we've been able to achieve with this. And I think sometimes we need that encouragement, don't we, that change is possible. And we'll definitely dig into that as we move through the questions. I'm now really delighted to be able to hand over to Moya from our Central Borders CAB. I'm not at all biased, sorry, as a girl who hails from the borders, to have someone who's going to be bringing some of the issues that are happening in that local community with us this morning. So yeah, really looking forward, Moya, to hear from you in terms of what this is meaning in the communities that your CAB serve. So over to you for the next few minutes, Moya.
Thanks, Emma. I think it's really important first to recognise that our advisors, they're seeing real fear. A lot of our clients, they're really frightened. And, when you watch a really scary film and somebody jumps out and makes you jump, well, a lot of our clients are living with that horrible feeling every single day. We had a dad recently who visited his local food bank at 6 miles from our office to ask for a food parcel. They told him he needed to go to CAB for a referral, so he walked the 6 miles to our office. Now, to be clear, that's a 12-mile round trip, walking on an empty stomach to ask for food, which is the most basic of human needs. And I think every CAB in Scotland's seen the horrible impact of the drastic erosion in services on our clients. The food bank in this town, the demand is so beyond capacity, they can only accept referrals on a Monday and Tuesday before 2 p.m. for collection on a Wednesday. The result is, if you reach crisis point on a Tuesday evening, you've lost your purse, your job, you have a wage or bank arrestment, or if benefits or wages haven't been paid, you can't get a food bank referral till the next week, and it can be up to 7 days before you receive food. Just a reminder, this is for food. It's not a luxury item, it's the most basic of needs. In areas like ours, the dispersed nature of services can be really challenging too, and that adds real difficulty for our community. Our local furniture initiative is 8 miles away, and transport's really expensive. Big journeys are great when you've got a car, you've got health, you've got petrol, you've got time, but not so much when any of these elements are missing. In fact, every issue is compounded in rural areas where any of these factors is missing. Services have been so eroded and are so dispersed around a huge geographical area that it can make life for those with a low income or health conditions or no car really difficult to navigate. And life can change so quickly for all of us. Sudden loss of a job, health, changes in circumstances can happen practically overnight. Rent, council tax, household bills, they don't wait, and the consequences of not keeping up with these payments can be pretty severe. A couple of missed payments and you're at risk of wage arrestment or potential homelessness. A lot of our clients can't take advantage of bulk buying bargains. They can't travel to discount outlets. They won't have access to affordable credit. We are seeing people suddenly fall into rent and council tax arrears, and they're becoming more vulnerable to payday loans, loan sharks, scams. So then we need to ask, where does that end up pushing people? So we can't be surprised when that people are pushed into crime. I spoke to a retired manager who's been in the network for over 20 years about this topic, and she said, what I find scary is that this hasn't changed in all the years I've been working with CAB. from freshly released prisoners reoffending because they're released at Christmas with nowhere to go and no money, to those having to decide what the priority is each day, let alone each week. It's a shocking reflection on our society. We see a lot of clients approaching our service who have very little, and the media would have you believe that we should be focusing on offering them budgeting advice. We always make sure we advise on the presenting issue, and we make sure we offer further holistic advice. But in our experience, a lot of our clients are already quite expert at budgeting. They can find the best deals, they know how to avoid waste, they could do a degree in making a little go a long way, and things are really challenging, and I'm afraid they only seem to be getting worse. But thankfully, cabs are still here, and despite all of the challenges, incredible volunteers show up every week to help their community, but they're tired, and it's a hard job, and it's really not getting it any easier. So over to you, Emma.
Thank you, Moya, for that insight. I'm sure everyone on the call this morning is just really struck by the experiences of the man who had to walk 12 miles in total to be able to get food. I just think that's a devastating lesson for us this morning, and something that we really need to reckon with. So thank you for sharing your insight of what's happening. We've had some really brilliant questions come in from folks so far, and we've got about 15 minutes or so to be able to take some questions. So please, if you've got a question, drop them in the chat. We'd love to hear your questions. I know some colleagues have been answering some of them, but we really do have plenty of time to be able to ask questions. So there's a great question that's come in this morning asking us really about the rural poverty premium from someone who's highlighting some of the challenges that those who live in remote, rural and indeed island communities have in terms of accessing everything from, I guess, from heating to cash to supermarkets, even broadband connection there. Just wondering if the panel have any reflections, I guess, on their experiences with how the poverty premium is experienced in rural communities, and what a solution might look like that's going to tackle perhaps some of the particular issues that we know that are in rural and remote areas. Maria, maybe start with yourself. I'm not sure if that's anything at all Fair by Design has considered.
Yeah, I mean, it's definitely a problem, isn't it? So there was a report in 2021 by the Scottish Government which looked at the kind of rural poverty premium and found that people living in rural areas faced costs that were sort of 15 to 30% higher than urban areas. And, there's a lot of drivers behind that, like the higher costs of transport, the higher costs of kind of everyday kind of food, clothing, the fact that so many properties are off the gas grid, lower temperatures in areas of rural Scotland. So yeah, it's definitely something that needs to be addressed, and Emma and I are in fact together on the steering group of a project called Taking Action on Rural Poverty, which is enabling two groups in Aberdeenshire and Argyll and Bute to kind of look at what they want to do themselves to tackle that rural poverty premium. So we're kind of excited. The next meeting is sort of later this month, and we're going to be hearing about what projects and proposals that they have to look at those. But yeah, definitely recognise it as an issue.
Moya, I know you sort of shared some examples there already, but I suppose this is very much your area, that you cover a large geographical area, very rural communities with Central Borders. What else is kind of coming up for yourself and colleagues at Central Borders CAB?
So in some areas, they don't have any coverage of food banks. So wonderful that food banks exist in the current climate, although we'd like to see them closed down for all the right reasons. But for some clients, access to food banks not an option. They can't travel. The travel costs really isolating if you don't have access to a local bus network. You can't afford a car, or you have poor health and can't get to a bus stop. The access to fuel vouchers is great for some of our clients, but not if you've got an oil builds that cost £400 to get you started off. That's not easy for us to access that kind of funding for people. So it is really, really challenging. I think a lot of people in our network who in the more remote areas, we talk about the central belt bias. So the central belt has access to a lot of services that we just don't have. So we have to be quite creative in our thinking and trying to access support for people who are quite often in crisis.
Thanks, Moya, for those reflections. There's 2 or 3 questions coming together that are on the theme of energy. Obviously, we've spoken quite a bit about that this morning. Both David and Maria have spoken about that. So giving you a heads up that I'm probably going to come to you both on these questions that we've had come in. We've got a question in particular that's sort of asking us about what do you think needs to happen with decoupling electricity prices from gas prices and what benefit could happen there. We've got a question in that's about the energy debt that has built up for people and what solutions might we need to see long term on that. And we've also got a question in about what action the Scottish Government might need to take in this space. We know that energy is largely a reserved issue, but we've got someone asking what do we think might be some solutions for Scottish Government in this space. So David, maybe start with yourself for some reflections on those questions.
Thanks so much, Emma. I'll probably just group those 3 questions and collate an answer together based on that. On the decoupling question, I completely get that markets and energy markets are in particular are notoriously complex and complicated. The outcomes for people when markets aren't functioning aren't though. The outcomes are pretty straightforward and pretty stark. Have you heard already today in Peter's experience? Have you heard when Moya spoke about the person had to walk 12 miles for basic, fundamental, essential needs? And I think again we talk about solutions. A big solution we talk about, and Maria touched on this, is an affordable social tariff for energy. But what would that look like? And for us, there's 3 principles, no matter what you call that, an affordable tariff, a social tariff, but there's 3 principles that should underpin that for us. First, it should be automatic. You shouldn't have to shop around for this. You know, people don't have time, people don't have bandwidth. It should happen automatically. It should be applied automatically. We shouldn't put the onus on people to switch around so that they're not ripped off. We did that. When the energy crisis happens, it stops working, you know, so it needs to be automatic. Second aspect of it needs to be additional. Because if we get, which sometimes we see from certain policy makers, a sort of rehashing, a repackaging of existing support, then what changes, you know? And the third aspect of it for us is it needs to be properly targeted. I think some of the way that we target policy interventions based on people who are already in receipt of certain means tested benefits is completely understandable, but we see a massive cohort amongst our advice population of people who fall through that net, typically single age working adults. Peter probably falls into that category if you think back to that example. So it needs to be targeted. And I think overall, when you talk about whether it's Scottish Government, UK Government, Ofgem, other regulators, I think use a wee bit of imagination here, because more of the same will just get us more of the same.
Maria, go to yourself.
Thank you. Yeah, on the decoupling points, I think this is part of the wider kind of reforms that are coming down the track as part of the government's review of the energy market arrangements. Definitely, like decoupling would help, and that will happen in due course anyway, as renewables kind of take over in terms of being the marginal unit and setting the price. But there's a question about whether more could be done to kind of accelerate that process or introduce a mechanism beforehand. But I guess we're interested in the wider picture as well about what those reforms look like, because you know it's again done on this thing that if we have a different price, it will encourage people to use electricity or energy at different times of the day. And our concern is everybody set up to do that? You know, do people have access to the solar panels or the batteries that you need to really take advantage of that, of those different prices? and they're going to be a lot more complicated tariffs in the market. Are people just going to disengage and end up on a more expensive tariff, or are we designing the market so that people on low incomes are at the centre? And I think that's a wider concern for us. But in terms of tackling fuel poverty and kind of energy affordability more generally, as we talked about the social tariff already, I think the other side of the coin is energy efficiency. So you've probably heard some things in the press about the government perhaps rowing back on its commitment to fully fund the Warm Homes Plan, which it said in the manifesto it put 13.2 million towards. And there are kind of rumours that the spending review might row back from that, which would be a real shame, because that amount, which is a lot, is still not enough to kind of fully tackle energy efficiency. And then in the long run, that is a really key way of bringing down prices for people as well.
Brilliant. Thank you both. I'm going to keep us moving, see how many we can get through. We've got some questions coming in around sort of access to banking and digital access, which I think I'll kind of group together. So going to come to you yourself first, Sarah-Jayne, and then Moya, perhaps hear from you again. So we've got a particular question about whether there should be a requirement to offer basic bank accounts, what we think about that, and some number of questions there just around digital inclusion, or rather who's being excluded at the moment. Someone's sort of mentioning in particular digital exclusion amongst older folks, and maybe keen to hear either from yourself, Sarah-Jayne, or indeed Moya, what perhaps that might look like for where you are. Any reflections on that? So over to you, Sarah-Jayne.
I mean, on the ones around requirements for banks to give basic bank accounts, technically there already is. So 10 years ago, in 2015, the payment account regulations came into effect, and 9 designated banks have to offer basic bank accounts, but they only have to offer them. They're not promoted. They're not actively shown, and if you apply for an account, you're more likely to get assessed for a current account rather than a basic bank account. So people don't know they exist, and they don't know how to ask for them. And then when you apply for them on certain websites, as we said in our research that we've done and holding to account, we found that people are having to jump through those hoops. So they either don't have the ID requirements or the standard ID requirements, like a passport or a driver's license or a birth certificate. And even though alternative forms of ID are accepted, again, it's not advertised and it's not told about. So what we think at CAST is that we have to have that universal service obligation. If someone comes in and they're looking for a bank account, a basic bank account should be offered, and it should be given without caveats. This is what happens in other countries. France, Belgium, Canada, other countries are already doing this. So it's something that we can do, and it's something we have the facilities to do. It's just about removing those caveats and those hoops that people have to jump through to get to it. And digital exclusion comes into it. So in terms of, like I said during my presentation, around this fall in bank branches are pushing people online. And then when it comes to money, a lot of people don't want to bank online. They're getting forced to bank online. And then COVID came along. And again, that was pushed further to bank online. Actually, when you talk to people and engage with communities and older people, younger people, all different types, most of them want to bank in person, but they're not getting that opportunity. Now, gone are the days that we've got bank branches. We can't go back to that. Banks are very clear that that's not an option, but we do have other things like banking hubs, for example. Now, in Scotland, we have 30 banking hubs, 18 are open and operational, 12 are coming over the next couple of years. However, there are only one in the Highlands and one in the Borders. And as Moya was saying, there's that central bias again. So there's quite a lot coming in communities which might not necessarily need a banking hub, whereas other communities who desperately need a banking hub, I'm thinking like our island communities who are having to travel by the ferry to get to a local branch. That's £30 a pop just to get to the bank.
Oh, we seem to have lost Sarah-Jayne, unfortunately, on that one. Moya, maybe come to yourself, thinking particularly of digital inclusion or exclusion. What's that looking like for the folks you're seeing in the Borders?
It's horrendous. Okay. I was just thinking there, the social tariffs on the mobile phones, great idea, brilliant, but you've actually got to get the bus to Edinburgh to get yourself set up on a social tariff for a mobile phone to take your identification, because there aren't the shops here. That's a £20 on a bus return. That's a big investment. If you're on a basic universal credit or on a low income, you can't afford to do that. Exactly the same with the basic bank accounts. So not as easy. It sounds great, but the reality of it is not, it's not that straightforward. The digital exclusion has horrendous consequences. So much is moving online now. And I just wrote down the example we had this very week of a client. We are on our third 2-hour appointment to transition from previous health-related legacy benefits onto universal credit. In theory, it should be straightforward, but there's so many you've got to verify this. He had 40 pence of interest on his £40 of savings. And because interest had been added, he had to start the whole process again. Somebody who has significant health conditions, it's not fair and it's not been made easy. There's no way that person would be able to manage an online claim. So it's not an option. So a lot of these forms, a lot of requests for assistance, it's all moving online. If you're digitally excluded, you're going to have to come to CAB for some help because of the erosion of the other services.
Yeah, thanks, Moya. Another really powerful example there, just about the challenges and the reality of rural life and the cost and time it takes. I think we've probably just got time just to go to sort of one more area before we sort of wrap up today. We've got a question in the chat that's sort of acknowledging the huge amount of work that the Citizens Advice Network is doing here, and sort of really asking what else is needed to help support our local cabs and kind of going about this work. And I think then I'd add on sort of a second to that question is around maybe what's the one policy solution that you'd be looking for that you think really could make a difference to tackle the poverty premium. So we just about have time to fly around everybody on the screen on this. So David, come to yourself first.
In terms of what cab network need, I think that's a clear answer for me. Advice about bringing stability to volatility, but cabs, the network, are exposed to a level of precarity that I think few other essential services, and I use that word essential service very deliberately here, are exposed to. So we need to see long-term, multi-year, secure funding. The problems that we're addressing are structural. You don't solve it in an annual funding cycle. So we need that stability for the amazing work that the network does. In terms of policy solutions, Emma, you've worked with me long enough to know I don't do ones, but I do three. Reverse the welfare proposals, the disability benefits, cancel the energy debt that was mounted when bills were unaffordable and when debt was unavoidable, make energy bills affordable for too many people. That's not the case. That needs to change.
Thanks, David. Maria.
We've talked about them a lot this morning, but I think I would say the policy solution that would make the biggest difference in terms of cutting costs would be a social tariff for essentials. So not just for energy in particular, but also for insurance and other essential services as well.
Thank you. And Moya, yourself.
Can I be greedy and go with two? First one, security of funding for Bureau and the network. The year-to-year fight to try and keep the doors open is really challenging. And the other one is we must stop the erosion of any more services. So we seem to be in a situation now where the services that are remaining are just signposting to CAB and hoping that we can perform miracles, which we do on a weekly basis. But any further erosion is really not going to help.
Some powerful suggestions from everybody this morning. Just remains for me to say just thank you so much to the panel. Thank you for your insight, for the examples that you've shared, the questions that you've answered. Sorry that we lost Sarah-Jayne. I know that she will be really frustrated that she's had a tech issue. Thank you to everyone for joining us this morning. You'll see in the chat we've dropped in a very brief evaluation form. We really value your feedback. It helps us to improve these, to make sure that we're focusing on the topics and the things that you want to. So please, if you just take just a few minutes to fill that out. You'll get today's recording dropping into your inbox later on today, so that you can rewatch or share with colleagues and friends. But thank you everybody for joining us again this morning, as we've had a really in-depth and powerful conversation about the poverty premium. We will hopefully see you all again soon. Our next episode of ForeCASt will be at the end of August. So keep an eye on your emails and make time to join us then. Thanks very much, folks. See you later.